Hi, everybody. Thank you so much for joining our webinar today. I will go ahead and start sharing my screen here as people are coming in. And then along with me today, too, I have Bill Gaffney from Lincoln Financial Group. I'm really excited to have him on here because we've got so many exciting things. I've been talking about Lincoln Financial like crazy lately, guys. They have outstanding caps. They're a very reliable, consistent product within the industry and just overall a great carrier. And so thank you so much for being with me here today, Bill.
Absolutely. Thanks for having me, Kat.
Thank you so much. Since we are having people come in and out, I'm just going to go ahead and get started. For our newcomers that are here to IMES, what we usually do on these webinars is a quick, sweet little introduction into IMES. And then, of course, you could always just give us a call afterwards, and I'll be reaching out afterwards as well, just to make a little bit more of an intimate touch there. But we do always like to go over our value propositions. And then if you've been with IMES for a while, these are some nice reminders as to what we have here to offer at IMES. And so for those of you that have spoken with me in passing, my name is Kat. I've been with IMES for nearly 2 years now, and I am an annuity sales director here. And so it's been truly a pleasure working at IMES with all of the agents. And what makes it a pleasure is all of the value that we're able to provide as an IMO. And so with that, I'll go ahead and just jump right into it. Our new producer builders for our newcomers, this is available to you in the first 180 days. You have different tiered levels based off of production. Now, this is just going off of annuity production. As you can see, you start at the $100,000 level and you start getting some pretty good perks and incentives like 1,500 piece mailings, iPad, $750 cash. And then it goes all the way up to the $1 million level where you do get some more advanced marketing options available to you as a thank you for doing business within your first 180 days here at IMES. And so everything you're seeing on this screen right now, if you're looking at it, this is all customizable. So definitely do not be limited to what you're seeing on the screen and what kind of incentives that you can get. Also, we'll say don't even be limited by that premium. It goes up to the $1 million level, but a lot of times what happens is we provide so much value that a lot of our agents typically just bring everything over. So don't be limited by what you're seeing on the screen in the first 180 days that you could be here at IMES. Once you graduate from your 180 days, you do get a marketing reimbursement balance. We call this our marketing dollars program here at IMES, where you are getting $100 of marketing reimbursement for every $100,000 of annuity premium that you're doing. And so this also does apply to life. I only work on the annuity side, so I know the annuity side much more, but you can always just check in with your life insurance director here or just give us a call. That whole life marketing team is very, very good at what they do. And so they'll be able to talk about different products and concepts a little bit more with you. But on the marketing side, they do offer $200 per every $100,000 of single premium life and then life target premium. $200 for every $10,000 of premium. So I've seen some people do that in one case off of like long-term care cases. So yeah, definitely don't hesitate to reach out. And then of course on the annuity side, you do $100,000 with Lincoln Financial, that's $100 back to you. And then what we do also here is a referred producer program. And what that is, that's a nice referral program for our agents. Our agents, we love to thank you for just referring your colleagues, your friends in the business to us. Just like for you guys, the lifeline of your business is referral business. And it's the same thing on our end. So these are Charles and Steve's favorite checks to sign off on. We do this on a quarterly basis. And so every time you refer one of your colleagues to us, you get a $50 one-time bonus. once they contract. And then once they start writing business, again, paid out on a quarterly basis, you do get some nice override. And that's not coming from their paycheck, it's coming from us. I'm just, again, as a thank you from Charles and Steve for trusting us with your colleagues' business just like you do yours. And so you get on annuity premium anyway, 0.20% on indexed annuities, 0.10% on MIGA business, single premium 0.075%, and then life target 0.15%. So that's pretty nice, especially if you've been in the industry for a while and have a lot of colleagues. We do also have some great back office support. So, we have an unlimited amount of back office support, I'd say. We have back office support both on our portal because we have quoting tools that you can use both on the annuity, long-term care, life side, but we also have some great tools that'll um, really help you put together some good case design if you're ever in a rush or if you just can't sleep at night like me sometimes and just want to start putting something together for maybe a really big case you're working on. You could do all of this stuff on the back end, and then you could also call into us where you have case design assistance. You also have the forms that you can just call in to your case manager or our new business team. So the back office support, great on the back end on our website, but also great when you call in and just talk to us, really. We do, and again, have our IMS website. On our IMS website, I mentioned it a little bit on the last slide, where you've got great quoting tools, you've got your sales resources library, and you have some good prospecting material too that I would highly take advantage of. It comes from fact finders to questionnaires, or even, again, prospecting material. We have some pre-formatted content that you can definitely take from and just put your own branding on. So, highly suggest that if you have not tapped into that yet. These are EAP solutions. We work with Luma, Firelight, iPipeline, Sunfire, although you'll probably be most familiar these days with Firelight and iPipeline. And so the nice part about IAMS is we do have dedicated Firelight staff as well. So for any annuity cases, I was working on a Lincoln Financial case just the other day, actually. I had Kirsten helping me out, and she did fantastic job at just making sure that there were uh, no NIGOs really. And so we try to get that as scrubbed as possible as we can before submitting that off, just to try to make things easier for both the client and the agent. And so we have a fantastic staff of people on Firelight support. We do also have our creative services. Our creative services include agency solutions, digital solutions, turnkey solutions, pretty much anything you name it. And the nice part, I would say the unique part about our creative services is the fact that we do not third party or outsource any of these things. I can just walk into their office right here in the building and go bug them about something that I might need done pretty urgently. And so that's something that I found to be really unique because the turnaround time is really good. We also have Ryan on our web development side, Ryan and Russell. They do a fantastic job when it comes to web design and maintenance. And then, of course, we do have handouts, brochures, flyers for people that still like to leave things in the house if you do still go locally or if you still go house to house. So lots of great material. Definitely take advantage of or ask if you've never uh, touched on this yet. We also have our IMS Wealth Management team. Absolutely love them. It is a different department than our insurance department, and so these guys are very, very good at what they do. They're also some of the nicest people that I've ever met. Um, a lot of times I've run into a lot of advisors that, you know, they've been around the block, and so they definitely know what they're doing. They don't feel afraid to tell people that. But these guys are also some of the most humble people that I've ever met, while still doing their thing, working hard, playing hard. They really help you increase your revenue. They help you improve client retention, and they also will help you strengthen any relationships that you have. And so, if you're an aspiring advisor, I would also definitely encourage you to look into their IMS starter program on the wealth management side. We do have a Life and Annuity Academy that's coming up here in just a couple of weeks. And so, what this entails is you've got great trainings. We customize these trainings, and then no training is the same from every academy. So, we do put these together because, of course, it's always going to be relevant to what's going on in the market and in the industry. And so, these Life and Annuity Academies are great for that purpose, and also just networking with some of our top agents, because there is a qualification to get into this, but there's a lot of good that comes along with it, and it is all expense paid. So, with that, certainly would suggest to come out to a Life and Annuity Academy if you have not been to one yet. Next, we do have our trek to Quebec. This is very important right here. This is our incentive trip. It's our IAMS all production incentive trip that we are doing. And the qualification period is coming to an end. So we have a very limited time of what we can do here. So at the moment, I will say we are doing double trip credit points on any MyGia business. So if you are on this call and you already have the SBLI Market Crest contract or American Life contract and haven't written their MyGias yet, I would highly encourage you to ask us about it. They're very short-term accumulation products, great for laddering, and we are doing double trip credit points for this. So we have a lot of people right now that are pushing for this trip. So just kindly give us a call if you have any questions on that, or just to see where you're at in qualification. And so that would come to the end of all of our IAMS value propositions. And that was just really a taste of everything that we have here at IAMS. And really, the best way to get to know us better is to show us how we do business. And so we want to show you and work with you and partner with you. And so for that, I'll go ahead and give Bill the stage here. That way he could show you everything that we've got going on at Lincoln Financial so far, because as I did mention, there's a lot of great things going on at the time. And so I'm very, very excited to have them. I'll just be sharing this with you, Bill, here in just a second. Make presenter. Alrighty, floor should be yours, Bill.
Looks like I am good to go. Thank you, Kat, and good afternoon, everyone. As Kat mentioned, I am Bill Gaffney. I am the Regional Marketing Director for the territory with Lincoln's Annuities, and I am truly excited to be here today to, one, share with you the enormous opportunity that stands in front of everyone in this room today when it comes to fixed indexed annuities, and then secondly, show you how Lincoln can provide you with a simple and predictable solution to capture on that opportunity. So to get into the story today, I wanted to just share my screen and hopefully, this works out for me here today. Okay,
I just see you right now.
awesome. That's even better, right? How about now?
There you go. 7 reasons why this future looks promising.
Awesome. Thank you, Kat. And really, this is where I wanted to dive in to the opportunity. So I'm not sure if anybody, or hopefully everybody, since it's a great movie, has seen The Perfect Storm. Now, I know that I am not as good looking as George Clooney or Mark Wahlberg, but I do want to show you that we are in the perfect storm when it comes to fixed indexed annuities. So this is a piece that Lincoln Financial has recently put together to show you the opportunity. And just going through this rather quickly, because I do want to be efficient with everyone's time today, I want to go through some of the incredible numbers that we're looking at moving forward with the amount of people entering retirement and just how much assets are going to be entering the retirement field here in the near or very near future, I should say. So you'll notice the first slide that I'm going to take a look at, which is awesome to see. The number of 401k millionaires in the United States has more than doubled since 2019. All right, now this is due to the fact that many people are entering 60 or becoming 65 years old. We always hear about that peak 65, but it's also due to the incredible market performance that we've seen over the past 2 years in 2023 and 2024. So it's incredible to see the amount of wealth that is, in America right now for these individuals that are entering retirement. And you'll notice the amount of individuals entering retirement is out of this world right now. You'll see that 11,200 Americans are turning 65 every day, and 4.1 million Americans will turn 65 each year through 2028. So not only is there incredible wealth amongst the individuals entering retirement, but the amount of individuals entering retirement is at the highest levels we've seen in America. And this is the last slide I want to show you before I really dive in to some of the solutions that Lincoln can provide. So over here to the right, you'll see reason 3 of why we are in an incredible spot and reasons why fixed indexed annuities are in a great place for sales is the amount of U.S. households with stocks or assets allocated to stocks, I should say, is at the highest percentage in the history, in any point in history, I should say. So one, we have more Americans reaching age 65 every day. We have more 401k millionaires ever than before. And we have more individuals with unprotected equities in America than we've ever seen before. So these individuals with high returns and entering retirement need a place to put their money that not only provides protection, but also performance on the upside. So today I'm going to show you how Lincoln's OptiBlend fixed indexed annuity can do just that, right? We're going to be able to provide 100% protection, but also give these individuals the opportunity for double-digit returns on the upside. So now when I get into my website, which hopefully, Kat, we're going to see that switch here.
Yep,
We're
that
going to
looks
take
good to me.
Awesome, perfect. So really what I like to focus on when it comes to Lincoln's OptiBlend product is really the 3 Ps, right? We look at pricing, performance, and predictability. So I'd like to discuss pricing. Many folks in the past have had tough conversations with their clients around volatility-controlled indices. You'll hear that they haven't performed well in the past. And really, Lincoln heard that feedback and provided a solution with our daily risk controlled 10% index, which is available with our trigger story, which I'm going to get in here too shortly. But when it comes to pricing with this index, we're able to provide great rates by managing the volatility of the S&P 500. And we do it with a very simple approach. This index consists of nothing more than the S&P 500 and cash. All right, nothing more than the S&P 500 and cash. And how it works is as the S&P 500 volatility increases, we simply increase our cash position. Very simple. As the volatility decreases, we're going to increase our equity position to capture more of the upside of the S&P 500. And by smoothing out the ride of the traditional S&P 500 index, we're able to provide great pricing, right? Because we're able to get more affordable options cost and then pass that through to the client and the contract in the form of a higher rate. And right now, with our simple trigger story, we have some of the highest rates in the industry. And a few other things that I like to point out when it comes to tough conversation around VCIs or daily risk controlled indexes is that some of them that you're going to find in the market only have a few years of real performance, right? They're going to use back testing for their actual performance. And we know back testing can get a little black and gray, right? With this index, we've been available since 2009. You're actually going to see the inception date was May 13th of 2009. So we have a ton of real performance dating back 15, 16 years. And you'll notice that 78% of the time, this index has been positive since inception. And if you're familiar with our trigger story, all this index needs to do is be flat or positive to receive those high crediting rates. So 78% of the time with this index, the client would have received anywhere from 9.75% to 10.25%, depending on the duration that they choose. So that's one thing I wanted to point out when it comes to this DRC index. The next is by increasing our equity position as volatility decreases and targeting a high vol number like 10% rather than most VCIs that target a 5% number. We're able to correlate very well with the S&P 500 itself. You'll notice in years like 2023 or 2024, when the S&P was booming, we were 70 and 81% correlated or invested into that index itself. So again, by smoothing out the ride of the index itself, we're able to provide great pricing. You notice those high trigger rates and provide predictability. As Pat mentioned or named this call, which I truly appreciate, we're able to provide predictability in an unpredictable market. We've been seeing a ton of volatility over the past few months, and it's just a great, simple story with our trigger strategy. You either get 0 or you get 10 and a quarter, right? That's it. And we've been seeing a ton of contracts that were elected maybe last year where the market right now is around 1, 2, 3, whatever it may be, percent modest returns, that clients are actually getting that 10 and a quarter trigger, and it really does shine. So we spoke about pricing. Now I'd like to discuss a little bit about performance. So we discussed 78% of the time since inception, this index has been positive and the clients would receive those high trigger rates. But this is something else I would like to show you when it comes to our S&P 500 daily risk control 10% index. If you look back, I should say, to 2015 and look at the last 10 years of performance, every year that the S&P 500 index has been positive, which is 7 of the past 10 years, the S&P 500 daily risk control 10% index has mirrored that and also been positive. And again, with this performance triggered idea or strategy, all we need to do is be flat or positive to receive that high trigger rate of 10 or 10 plus returns. So 7 of the past 10 years with that strategy, the client would receive that high trigger rate. So we spoke about pricing, we spoke about performance. The last P that I mentioned was predictability. And with this strategy, we have now provided a trigger lock when it comes to our daily risk control index. So as advisors, I'm sure you've had tough conversations with clients in the past when it comes to renewal rates. Well, again, Lincoln heard that feedback and provided yet again a simple solution that provides predictability for your clients. With this 1-year S&P 500 daily risk control trigger lock, you can now lock in 8 and a quarter for our 5 and 7 year durations. Now that 8 and a quarter is known fact, guaranteed. It will stay that way throughout the duration of that 5 or 7 year contract. So again, providing predictability in an unpredictable market, we can tell clients for the next 5 or 7 years, you're either getting 0 or you're getting 8.25%, we can take that renewal rate conversation off the table. And the last thing I wanted to mention is you can get 8.5% on our 10-year trigger lock. The one caveat that I do want to point out is that with that 10-year, you're locked in for 5 years, and then there could be a renewal after the first 5 years for the remaining 5 years. So we spoke about pricing, we spoke about performance, and we spoke about predictability. The fourth P, I can't help myself today. I need to discuss it very quickly, is partnership. So we can diversify within our OptiBlend fixed indexed annuity. So what I recommend is partnering our 1-year S&P 500 daily risk control trigger with our 1-year S&P 500 participation rate. So we can get upwards to 10.25% on the trigger and upwards of 62% on our 1-year S&P 500 par rate. And if you actually take a look, when you do blend these strategies together, not only are we are we diversifying, which is always a positive thing in our industry, but let's take a look at the numbers. Over the past 15 years, the blended strategy of our 50, if you put 50% in our participation account and 50% in our trigger account, it would have been a 6.8% average rate of return dating back to 2015. All right, or I'm sorry, 2009, 15 years since 2009, my apologies. And that would have actually outperformed a 5% fixed rate by $61,000, given an initial premium of $100,000. And let's just look at the fine print today. This is off of a 50% participation rate and a 9% trigger. So when we go back to our rate sheet here, and we're talking about 10.25% on our trigger and 62% participation rate, that's getting up into the 7% average rate of return over the past 15 years with that strategy. All right, so we spoke about those 4 Ps. 2 other strategies that I want to mention, since Kat gave me plenty of time today, which I truly appreciate, is we recently launched, actually as of yesterday, multi-year participation strategies. We launched one on the traditional S&P 500 index, and we launched one with that S&P 500 10% daily risk control index that I gave a quick overview of today. And you'll notice the numbers actually pay off higher if you enter this multi-year strategy with our DRC index. And that again goes back to that idea of pricing. Not only are we able to get better pricing by having a longer duration strategy, but also I mentioned with this index, we're also able to provide better pricing and better rates due to managing the volatility of the S&P 500 itself. So let's just take a quick look at the numbers. We'll go through our 5-year strategy first. All right, so if you take a look back to 2009, we have 2,679 rolling 5-year periods that we took a look at. The average return of this index was 46%. But again, we can provide great rates with this index. So let's look at 150% participation, right? That's our current crediting amount for this 5-year participation rate. That would have been around a 70% rate of return, right? Or 70% return, I should say, for that 5-year duration. And then if you actually jump up to the 7-year and we take a look at those 7-year rolling returns since 2009, average return of the S&P DRC 10% index was 72%. And in this account, we can actually get 160% participation rate. So on average, we would have credited 115% during that 7 year duration. And that is with no risk, right? 100% downside protection and no fee. So we feel that is a great, great story that again, we launched as of yesterday. So I know I went through a lot. I know we have a chat question. Um, he, you know, do we have a chat question? I should say, Kat.
Yeah, you are right about that. Good catch. So, it looks like there's a question from Karen. Are copies of Bill's slides available to the audience?
That is an excellent question, Karen. So the first couple slides that I went through was the 7 reasons why. That's for financial professional use only. The rest of the material that I covered is client approved. So we can
Nice.
share that directly with our clients. So I can absolutely follow through with the materials that I covered today.
Yeah, Bill, that would be great. I love the fact that all of that material is also client approved. And so, usually what I do after my webinars is send out a good email with all of the information we covered. And so, yeah, if we could include that slide, that'd be great. Those caps are something to stare at for a while.
That's why that's why I pulled it back up, Kat, is because our rate sheet looks incredible right now. I mean, this makes my job a lot easier, right? Like I spoke about our DRC index and how it's been performing very well for us, and we're able to get double-digit returns on that trigger. I'm telling you, we've been seeing contracts that issued last year that where the market's doing 1 or 2%, where we entered those months or weeks of volatility here in the past, over the tariffs that we've seen that are crediting 10 and a quarter. The clients are going to be very happy when they see that. And really here at Lincoln, what we're looking to provide with OptiBlend is positive client reviews. And when I discuss that all weather blend strategy, right, when I'm talking about maybe allocating 50%, or I'll even take it a step further where we maybe put third in the fixed account, a third in our performance trigger, and a third in that par rate. So we really have all of the market returns covered. Because if the market's negative, that fixed account's going to provide growth for the client. If the market's modest, that performance trigger is going to shine, right? If the index itself does 2, 3, 4%, whatever you call it, that index of or that crediting of 10 and a quarter is going to shine. And then lastly, if we do see markets go up 24, 25% again, which hopefully we do, right? We're all hoping for that. That 1 year S&P participation rate of 62% is going to help capture double digit returns in a situation like that. So again, positive client reviews regardless of how the market performs with that all weather blend strategy.
Yeah, that is so powerful too. That trigger lock too is pretty amazing. Even in the 10th year, even if there might be a renewal period after those 5 years, that's still really high for the first 5 years to lock in.
Yeah, absolutely. And like you named this perfectly, right, Kat? You said providing predictability in an unpredictable market. It doesn't get more predictable than the 1 year S&P 10% daily risk control trigger lock. Again, however the market performs, you get 8 or 8 and a quarter or zero, right? Doesn't get any simpler than that. All this thing
Yeah,
has to do is be flat or positive, and you get 8 and a quarter. And again, that 8 and a quarter stays the same for the duration of that contract. You don't have to worry about renewal rates.
that's awesome. And then two, also just to kind of go back to that multi-year strategy, that would make a great RILA alternative, right? And there's no fee to
Absolutely.
it.
Exactly. And I appreciate you bringing that up, Kat. That's really how we've been positioning this product as a RILA alternative because one, we're providing 100% protection, no fee, and incredible upside on these two indexes for a 5 or 7 year duration. And if you actually take a look at the RILA industry, they did $65 billion last year in business. And if you take a look, which was actually surprising to me, the most used crediting strategy was a 6-year term. So there is a need for these longer duration strategies in the market. And I feel we've even simplified the RILA, because if you take a look at a RILA rate sheet, incredible products, but clients I could see getting a little confused deciding on what buffer they want to choose. Maybe it's 10, 20, 30%, whatever, discussion they have with you as the advisor. But with this, what I like is, again, Lincoln's providing simplicity, 100% protection downside, no fee, and that you know exactly what you're getting with these rates here. And again, that takes the renewal rate conversation off the table as well, because you don't have to worry about what you're getting. It's providing a predictable outcome for the clients.
Absolutely. I love that so much. That's why I've just been talking crazy about Lincoln Financial Group. And so um, I'm leaving the questions box open just in case we have any other questions, but I'm also going to launch a quick poll here asking if you'd like to appoint with Lincoln Financial Group. So I'm going to go ahead and launch that. I don't know if it shows the poll on top of what your rate sheet was. I wish it did, because that would make
I
it even
will. I'll
easier.
stop sharing. I'll stop sharing.
Oh man, that is all good stuff. Yeah, I've got nothing but good to say about Lincoln Financial. Such a strong history too. They've been around since 1905, guys. Like you can't beat that.
Absolutely. Great financial strength. And the last thing, Kat, I know I took up probably too much time today, but I know we went through a ton of information. We discussed that DRC 10% index, which we truly believe in, providing that pricing performance and predictability. But hey, if you're comfortable and your clients are comfortable with the traditional S&P 500, not only do we have incredible participation rates on both our multi-year accounts and our 1-year account, but we also have a trigger for it as well, right? So we can get up to 8.25 on the performance trigger with that traditional S&P 500.
That is awesome. Yeah, that's crazy. There's a lot of good things going on with Lincoln Financial in such a volatile market. So I did see three people there say that they wanted to get appointed. So thank you so much for responding. I will definitely be reaching back out. I've got a couple more polls here. Would you like more information on Life and Annuity Academy? I'll go ahead and launch that poll. I might as well share my camera here while I'm launching this poll. I don't know if you guys will see me, but
Thanks for not leaving me alone up here, Kat.
yeah, no. You were a lone wolf up there, and now neither of our screens are seen. It's just this poll. So,
Awesome.
and I've
Again, I
got
appreciate
one.
you having me today. This was great.
Yeah, yeah, absolutely. You guys have been just such a pleasure to work with. And then you guys are so, so simple too about your approach, which is what I love. And it's a very sophisticated conversation to have with clients with such a simple way of presenting all this material.
Absolutely.
Alrighty, well, I'm going to go ahead and close this up. I'll be reaching out to everybody here after this. Thank you again so much for attending. And Bill, thank you for being on with us today. Do you have anything else you want to share?
No, that's what I wanted to cover. I appreciate you giving me the time today, Kat. I appreciate the partnership that we have with IMES, and I'll make sure that I send over all the materials that I covered today, so we can get these out to the folks that were looking for them.
Yeah, that would be wonderful. Thank you so much for your time, Bill.
All right, have a good one.
Alrighty, you too. See you guys.